What's going on, everyone? Taking a look at the SPY. What we're looking at here is a close at 436.66, up 0.5%, but $2.86 on the day. Now, the area that was acting as, a troublesome spot for the SPY was that 430, that 431 area. The last time we came into that zone, we got rejected, kind of pulled back. We can go all the way back here to last year. If you kind of look at this area here in August, October, September, we really made that push into that weekly 50-day moving average, and then was followed by a very steep, harsh drop all the way down to the 200-day moving average on a weekly time frame. And we got the nice bounce followed by a pullback, putting in a higher low, followed by another bounce, followed by a new higher low. And then we've been on this absolute just crazy, insane, intense rally, realistically on the SPY since about March, right? So if we kind of look at this area here, we've broken over this area of supply, over this area of resistance. What I expect here is a full-on summertime push, just continue to tread higher. Now, does that mean that each and every single day is going to be green? Absolutely not. Does that mean that if you buy calls or you go long tomorrow, that the stocks don't pull back on Friday or next week and you sit in 2 or 3 4 days worth of drawdown? Absolutely not. But what I'm trying to tell you is that right now the bulls are in full control until we realistically start losing some of these shorter term demand zones, like the 20-day moving average or the 50-day moving average on a weekly time frame. You really need to be looking to buy into weakness to try to bounce some of these names. Now, technology has been exceptionally strong. I don't expect technology to continue to kind of lead the way. Look for other things that are coming off the bottom. Look at retail. Look at some of these small caps in the IWM. Look at some of these speculation names. As big tech and mega cap stocks start to consolidate and they start to kind of take a breather, you could see some of that money outflow into some of these higher speculation names, and that's where the rotation can be. But it doesn't necessarily mean that the SPY is going to be trading down at 380 or 350 again, right? We could very well have put in those lows in October. As it sits and as it stands now, we've made nothing but a higher low since October of 2022. So we can kind of officially say that this bear market is over. We've entered into bull market territory. And again, I don't want people to just, load up everything and mortgage their house and sell their kids to try to just go long on stocks. Now, I think we need a little bit of a pullback. Some of the pullback areas I would be looking for: 426, 419, 420 on the SPY. Definitely look to reload in those zones. Now, anytime we break out from an area of supply, we're going to put in a new high. That's what's happening right now. So continue to ride the trend to the upside until that momentum starts to shift. But anytime we break out of an area of resistance, always look for the back test, a classic break, retest. Look for that new area, that old former resistance to kind of act as, going to be new demand. And when that happens, you want to be on that second wave coming out. So if you're currently sitting long now, that's completely fine. Continue to sit long and take your profits along the way. When you see it start to really pull back into some of those supports, that's when you're going to want to maybe clean up those positions, depending on where you got in. If you're sitting in calls that don't end till next year, and your price strike is like $380, then you're 50 points in the money, you're sitting fine. I'm talking for people who have just bought maybe within the last day, people who are playing weekly expirations, 0 days till expirations. Definitely, if you're playing 0 days to expirations, be a little bit more cautious. You're going to want to buy on those bounces instead of just continuing to buy the top and top, because there's going to be that one time where you buy the top and that day decides to come down 3, 4, 5 points. You don't want to get caught in that, because those are generally the type of people that go over to social media when, for example, you haven't made any money since coming off of the floor here at 385. We're 50 points higher in the last 3 months. You suddenly get the urge, because everyone else is making money, to buy a call at 438. And then lo and behold, 2-3 days later, we're trading at 430, right? So don't be that person. But again, if you're already in the move, like the breakout on the SPY, the last breakout that we had, because right now this is just continuation, but the breakout that we had on SPY was over 418, 419, 420. So if you've been long since 418, 419, 420, make sure you're taking those profits. If you're a shorter term swing trader, or if you're a day trader, you're kind of playing this on the day in and day out, you already kind of know what to do. But again, our max potential end of summer fall time, I would expect the SPY to touch $466 by the time this year is over at some point in time. We have broken into a new channel here. Again, we could run into the 440s before we start to back test. Look for that 426, 430 kind of hold. If we look at the daily time frame chart here, again, same kind of deal. We've broken into a new channel. We're kind of just floating up there in space. As of right now, our daily support 432, 431, that was our original breakout spot. That was the area that was acting as resistance. So look for the classic break and then retest. If we can now start to hold this zone, maybe it's 2 weeks, maybe it's 3 weeks, maybe it's a month, and we can hold that 430s area, right? Even the high 420s. If we can hold that area, look for the follow through and continuation through 437. You already seen on the weekly chart, we've got open skies to 450, 460. That's what you're going to want to be looking at. If you're a smaller time frame trader, like maybe you're an intraday scalper or a day trader, look at the hourly chart here. You're going to have support down here at 436 and 435. Again, kind of hard to just jump into short positions unless the whole day is just absolutely bleeding red on some sort of bad news. But again, if you're looking and you must and you believe that you need to take a short position and you want to buy puts, please let an hour candle close below 435. Once it happens and once that does come, to the charts, what you want to see have happen is 435 closes. Okay, we get that close below. You're going to look for a following hour candle to confirm those lows. Again, your next support is going to be at 434. So how much room do you really have, right? How good of a scalper are you? How quick are you? What's your position sizing? Because if you do get trapped, let's say, for example, this, SPY breaks down and it closes on an hour candle at 435.25. And then the next hour candle confirms and you get in short and it comes down, 80 cents. You think you're in the money. You turn off your computer screens because you think you're going to ride this trade, for 3 or 4 days. It quickly tests the 434. You were in the money $1 and then reverses, because this is going to be a strong bounce point here for an intraday level. That 433, 434. I would look for bounces in this area and I would look for hard support at 432. 432 is definitely a buy. Between 421, 432 is a buy. Your bounce areas here are 433, 434. And if you are going to take that short position below 435, 436, make sure you're taking profits on the way down. The last thing you want to have happen, I know this is after hours, but the last thing you want to have happen is candle to come down, come into that support. You don't take any profits because you think we're just going to magically go down to 420 again, and the next thing you know, you get sucked back up and you get completely trapped, right? So look at this candle here in the pre-market. I know this is CPI, but look at how we kind of had that initial flush and then we completely reversed. How many people on that CPI data print here got short, right? And if you weren't smart or not experienced enough to kind of take your profits into this demand zone right here, this is a 50 EMA and this is your Bollinger Band. If you weren't experienced enough to know that once we broke 433.90, you were going to be coming into support here at 432. If you did not take this 80 cents, dollar, depending on when you got filled, if you're playing the equities, obviously, if you did not take that money off the table, you quickly got reversed. Now, if we look at when the market opens right here, you look at this candle, how we immediately shoot up and then we kind of pull back, right? That first hour candle, first hour and a half candle, we did pull back. We had a significant pullback, but just look at the charts. Where did we pull back into? We pulled back into support. Where did we pull back into? To the 5, 10, and 20-day moving average. Look at how pinpoint bounce. Look at the pinpoint bounce that we had here off of the 20 SMA, okay? Literally almost to the penny, that 434.61. If you would have known that this is here and you're watching the hourly time frames, you would be a buyer off support. Okay, you're a buyer off support. You're selling into supply. You're holding runners until we break the next supply. You're holding runners until we break the next supply. You're holding runners and you're selling at high of day. That's how you become a more efficient and more consistent day trader. You want to be looking at these bigger levels. I don't care if you're scalping on the 1 minute time frame, 2 minute, 5 minute, 15 minute, 30 minute, it doesn't really matter. You need to know your intraday macro levels, which is going to be the 4 hour and the 1 hour time zones. You want to find out where the supply is. You want to find out where the demand is. Then once you have those, you can then go down into your smaller time frames and then start to scalp those levels accordingly. So if we look at the 5-minute chart very, very quickly, because I'm getting long-winded in this video, if we look at what happened here on the pre-market here in the CPI data print, we had this immediate flush that does not come down and test this demand, gets sucked back up, comes all the way back up to supply here, pushes back down, and then start the rally train. If we look at where the market opened right here, you can see a nice little pullback into this top channel here. However, we're still over this purple line, and that's the 20 SMA. So anyone who is just going to kind of use, you know, their thought process in their own opinions and say, well, you know, that's it, CPI numbers, this, that, and the other, they got the push in the pre-market, I'm going to buy puts off the bell. Anyone who bought puts off the bell got completely ran over by a steam truck. If you look at what happened here off the bell here, we immediately lost that initial previous 5-minute candle low in the pre-market that we put, and we tested this rising 20 period moving average and bounced off it from a price of 435 all the way up to a price of 437.16. People and traders who bought puts off the open got their faces absolutely destroyed for $2.15 off the open. If you are smart, you're going to let this digest. You're either going to take calls here knowing that you have a ton of support until we really start to lose 433, or you're going to let like the first hour candle kind of play out, and you're going to see, what do we do here? If you kind of go and see where that first hour candle played out here, if we go to 7 o'clock, where is my 7 o'clock candle? 7 o'clock candle is going to be here. You can see we put in an initial back test to the 20 period moving average, and then we spiked into the upper Bollinger Band, came back down, lost this channel, and came back down to the 50. So just keep in mind, when we lose the 20, more than likely we're going to trade down to the next area of demand. In this case, it was the 50-day moving average. If we were to lose the 50-day moving average, then more than likely we're going to trade down to the 100 or the 200 SMA. You got to play in between the lines. When we bounce off the 50, expect us to go back to the 20 and at least back test it. You can play calls from the 50 into the 20, and when we break the 20, you can play 20 into the 10, into the 5, and when we get above everything, you can play towards higher day, pre-market highs, or previous day's highs. That's how you kind of have to work it. A lot of times people get into trades and they just expect, because the market is going down right now on this 5-minute candle, that it's going to go down all day. They have no idea that it can go down for 5-10 minutes and then completely reverse. People buy calls when they breaks a pre-market high, not understanding that you got supply zones ahead, thinking that it's just going to run all day, all week. Lo and behold, it hits a pre-market area or hits a previous day high or low, and then gets rejected and comes back down. So again, you want to be smart with your trades. You want to be smart with your money. Again, if you are learning how to trade and you want to get more information, maybe you want to work with me one-on-one, maybe you want access to my courses or get in the live chat with the watch list and all that other good stuff, and trade with the rest of the gang, make sure you join the Discord. That link is down in the description box. Also, make sure you become a member at evolutiontraders.com, and I'll see you guys on the inside.